But what the markets really want is a whole lot more money for free. And the problem is, what they've discovered in China, frankly, is that they can make lots of credit available, but at some point, and Japan has definitely also experienced this, it's like pushing on a string. It doesn't work anymore. So we'll see what happens, and if yesterday's run up and today's reversal, at one point it was down 611 points, the Dow was, if that's enough to change this course. And if the pensions rebalancing their portfolio and going in and buying the stocks, catching that falling knife with your money, is that enough to reverse it? I don't really think that that's so. Because what I really think is happening is that the crisis is unfolding right now. That's my opinion, but that's also what the data tells me. Let me show you why I'm saying that. This is the NASDAQ. And this has certainly been, the stocks in the NASDAQ, Apple, Facebook, all these guys have certainly been a big part, and they're certainly held in all those ETFs. But this is the trend line. So where the lows hit, and then in 2007-8, there's where the lows hit. This is the trend line. Frankly, this will keep going, but it's not in a really steep way. That indicates that it is possible for the NASDAQ to go below 2,000. Now, I don't know whether or not it will or it won't, but technically, based on the trend line, that it would shock me, but it wouldn't surprise me, because that's what the technicals are telling us. How quickly? I don't know that either. Time will tell us that. But it's definitely indicating that it has a long way to go, and that it could give up 75% or more of the gains from its most recent high, the end of September. But what I really also want to point out, because you guys know I pay a lot of attention to volume, because volume is really going to be indicating the speed, the pace, or when we are going to lose access to the markets. Okay? As long as, keep in mind, in the ETFs, they do not have to liquidate, even though you do. If you liquidate, they can pay the authorized participants in shares of the underlying stock if it's a passive fund, where they can create another ETF and give them shares of that. So it's when those authorized participants, the banks that are holding these shares, when they are forced to liquidate, that's when the big trouble really starts. So what I'm seeing, though, is between the derivative crisis that happened in 97 and 98 run up to the 2007-2008 crisis, we had a cup formation in the volume, the number of shares that were traded. As long as the government and the central banks are pumping money into the system, that slows down that volume and volatility, and the shares can rise on less volume. Well, you can see the peak here. Look at, we've got another cup formation forming there. And on Monday, we had volume that even exceeded what happened when the markets were crashing in 2007 and 2008. I'm telling you, there it is. Now look at the volatility, the VIX index. It's at the same levels that it was as the crisis was unfolding. And let's see, here we go. It was higher in 2009, right? At the height of the crisis. Remember, we talked about that. And then 1, 2, 3, 4. Only 4 other times since 2009 has the volatility been higher on these exchanges. Here's the bottom of it. It's going up. And when you stretch this little piece out, 2018 out, okay, darned if there isn't another cup formation. That's an accumulation base. So what's going to happen when the volatility and the VIX hits up here? Is it going to go higher, or is that what's going to crash the rest of the market? I don't know. I'm going to pay attention to it. I'm paying very close attention to it. I will bring your attention to it so that we can see. But these are all huge warnings that the system is falling apart. The technicals of the system, the underlying support of the system is not there. And those new derivative tools that they've created, because hey, if you can create something from nothing and then get people to buy into it and give you money for it, and then you control any of the physical underlying, rock and roll hoochie coo, that's what Wall Street is all about. It's about transferring your wealth their way in smaller increments so that you don't notice it, or in major crisis so you do. And because you don't think you understand it, but really all you have to do is learn how to read the patterns and see the patterns. And when those patterns shift, all you need to do is understand that they mean something significant. So what are the insiders doing for themselves? You know they've been getting out, and you also know they've been buying gold, and now Wall Street is telling you to buy gold too. But their preference is for you to do it with GLD or any other gold ETF, because your perception is that I have gold, I'm safe, there's my flight to safety. When in reality, and we've talked about this many times, all you have are shares of a contract. But those authorized participants, those banks, they're the ones that are controlling and have access to the underlying physical gold, which is the true flight to safety, because it's the only thing, and the silver too, but those tangible assets that are completely outside of the system, that's the flight to safety. No debt attached, pretty much invisible. Physical is invisible. Digital, GLD, not invisible. Easy to see, easy to control. And even in these fiat markets, and I've pointed out to you before, we have cup formations, there you go again, cup formations in both spot gold and spot silver. This is a relative performance chart, just showing you the performance between the stock market, and these are global stocks, and gold and silver. You don't see that kind of cup formation or solid foundation in stocks, and I could go all the way back and you wouldn't. You'll see a V. A V is not a cup. A V is an indication of maybe some manipulation, but there's something that's going on that's causing it to go up. Reflation trade, quantitative easing. A cup formation indicates that smart money is building the foundation and the base. So while we like it with spot gold, and I'm going to tell you, yeah, spot gold is, you know what, near a 6-month high. And that's awesome, but don't get caught up in that, because that's still a Wall Street product. And what Wall Street pushes up, Wall Street can easily and cheaply push down. So just keep that in mind. I know that it's fun. I know that people like it, especially if you're holding it and you want it to go up. It will go up. But we want it to go up really when they're doing the reset. That's where you're going to see the gains. Because what is really happening then is your wealth is being protected. So I wanted you to keep that in mind. I wanted to talk a little bit about the spot prices and how they are moving up. But quite honestly, your best time to buy was here and here for gold and silver. Your bottoms, look to me as a technician, look to me like the bottoms are definitely in. We have not concluded the cup in either case. So today is probably your cheapest time to buy. That's what all of this is telling us. And tomorrow we're going to do Q&A. So I would encourage you to send in any questions that you have from this interesting week into questions at services. Which one is it, Carl?
Questions at ITMTrading.com.
Oh, questions at ITMTrading.com. And I also want to give you a reminder, and then next week I'll do what I originally had planned for this week, because it really does look like the leverage loan market is falling apart. Okay, so 2 days ago, X22 released the interview that I did with them, and I feel it was a really, really good one. So you can access that on our homepage. There's a section, and if you have any questions, just give us a call, because that is not my area of strength. But there's a section where you can go in and you can look at that interview, and I thought it was a great interview when we did it, really powerful, and you know, Dave is just great with questions. And then for those that are paying attention too, remember, we have an event that's coming up. It's a weekend workshop, February 8th and February 9th here in Phoenix. The most comprehensive workshop that I have ever done on the strategy, and the goal is we're keeping it super small. So you get a lot of one-on-one, and the goal is for you to have completed and set up your entire strategies for accredited investors. So if you're interested in that, you can ask your precious metals consultant. You can give us a call. You can find it on www.itmtradingevents.com. And we're going into the new year, so we'll see you tomorrow. Remember that shields are made of metal, not paper or promises. And until tomorrow, please be safe out there. Bye-bye.